Good morning, everybody. It is October 27th, 2022, and we are heading into Halloween weekend. How scary will it get? Hard to know, but let's take a look at some things that will help us figure it out and be prepared when whatever is going to happen happens. So let's take a look at the US dollar. We can see the major cycles that it goes through. Up. And why did it go up in this time frame, which was the early 1980s? Because Volcker raised interest rates to kill inflation. Why did it go up here? Because Alan Greenspan thought that there were bubbles developing, right? Irrational exuberance. He killed that bull market there. The dollar's gotten stronger and stronger, and lately it's gotten very strong into the overvalued range. Why? Because the Federal Reserve chairman decided there was a reason to do it, inflation, so he can kill inflation. What do they all have in common? A Federal Reserve chairman drove interest rates and the dollar higher each time that the dollar got super strong. In these cycles, the United States basically financed the world economy through buying their things, their stuff, their products with dollars that were a little bit cheaper, which meant that we were transferring wealth to them. Now wealth is transferring back to us because of the stronger currency. And you may not think about it that way because your portfolio is down. But in reality, your dollars can purchase a lot more assets. We'll talk about that a little bit later in the program, because you're going to want to use all those dollars I told you to hoard up a year ago to buy some of these cheap assets. And while some of the cheap assets are in the United States in small caps and mid caps, there are an awful lot of cheap assets around the world. And we'll cover one of the opportunities that I think we have to hold our nose and get involved with. This chart jives with my dollar chart, which I've been tracking for you a long time. Only very minor tweaks on it. I told everybody there would be a bull market in the dollar way back in 2012 and 2013 and 2014 when everybody told us that the dollar was going to collapse. And I pointed out the dollar's already pretty low. You get the nature of a lot of analysis is people tell you, hey, this is going to happen while it's already happening. Does that help you much? Wouldn't you rather know before something happens that it's going to happen? I told you when President Biden got elected, that would mark a bottom in the dollar and we go back on another dollar rally. So within the secular bull market in the dollar that I identified a decade ago, I also told you there'd be a cyclical rally under President Biden. Now, does it spike up higher one more time? I think it might, but that'll probably be the end of it. At that point, the dollar would probably start to drift back down to this higher trading range that I've identified that we'll likely have while the millennials are in their peak spending and earning years. There will be a speed bump in there somewhere when we pay off the rest of the baby boomer retirement. And maybe that'll get paid off over time rather than through a crisis. Hard to know. We seem to really like using our crisis. So if we get a crisis, just expect us to go back to QE and fix it. And we'll get a lower dollar for a little while. But the reality is the United States economy is so strong, so much better than, say, Europe's, and it's going to be better than China's and Japan's, which doesn't have resources and is a very old economy. Of the four major economies, the United States, Europe, China, Japan, the United States is clearly the strongest. But we get all irritated with China because they're second and saying they want to be first. Whatever. It's tough to be king. I think a lot of this rhetoric between the countries is leadership that has agendas that are outside of what they're actually talking about in public. Ultimately, I don't think anybody wants World War III. I think China wants the status quo with Taiwan. I think the United States does too. But we have to tell China now at this point, because Putin crossed the line, hey, China, you have to figure something out with Taiwan short of invading them. Otherwise, things are going to get really bad. And to me, that still does remain the only thing in the world that I can see making things materially worse. There's a war between China and the United States, because I don't believe Russia's that strong. I said so for years and years and years. They weren't that strong. And I do believe that Putin will be out of power sooner than people think. And there will ultimately be some sort of a deal on Ukraine. And the deal will basically be that Russia pays reparations, Ukraine gets all of its territory back, including Crimea. Russia gets a port, they get to keep their bridge, and it becomes some sort of a free trade zone between the East and the West. That's what makes sense. That's probably what will happen. When Elon Musk goes out there and basically says that the Ukrainians should capitulate, he can kiss a lot of people's ass, which is something along the lines of what the Ukrainian ambassador told him. When you go back to the dollar, this is integral to the discussion. Several analysts out there are saying that the United States has weaponized the dollar. Well, sort of, but they started it, right? Go back to that little kid thing. Yeah, but he started it. And Russia and OPEC and China did start it by weaponizing energy and supply chains to cause inflation. And now what you're going to see are strange bedfellows. China benefits from this. The United States benefits from this. And really, OPEC benefits from this because they get a higher price per barrel around the rest of the world. Think this through. The United States doesn't import much oil anymore, just enough to keep a couple of refineries running the right way. Saudi Arabia owns the largest refinery in America. Most of the oil that comes here from the Middle East is for that refinery. Almost all the other oil that we get for our refineries comes from Canada. A couple of trips from OPEC, trying to get a couple from Venezuela. So everybody really benefits from what's going on except Russia. China, OPEC, and the United States are all actually going to benefit from what's going on right now with energy and inflation and currencies. Russia's falling down the sword here. Putin didn't even know what was going to happen to him. Ever watch one of those TV shows where everybody's scheming for their own ends? And there's one person that thinks one is an ally, thinks another one's an enemy. And it didn't matter because they were going to get stuck anyway. That's what's going on right now. Putin got played. Putin's going to end up out of power or dead. The only question we have on Ukraine is, does Russia do something desperately stupid with regard to a nuclear detonation or a dirty bomb? I don't know. I'm not so sure that the generals would support that over in Russia. But if they do, that's a flashpoint too. Because at that point, you probably see the United Nations authorize peacekeepers. Those peacekeepers would mainly be Americans coming in hot. So that's scary in the short run. Like I said, if it leads to the end of the world, been nice knowing you. But you can't plan for that. Your investment strategy doesn't take that into consideration. So what's next for the dollar? And what has it been impacting? They said there probably could be one more spike in the dollar. The Federal Reserve knows that its rhetoric can achieve ends. What does the Fed really want? The Fed wants the S&P 500 to go lower because they want the wealth effect to be felt less. Millennials were spending a lot of money and Gen Z was spending a lot of money because their trades did so well during 2020 and 2021. They weren't going back to work. They're spending all sorts of money on travel and other things. And the Fed, rightly or wrongly, I think wrongly, is trying to control demand rather than really focus on expanding supply chains and energy development. The federal government's done a pretty good job with that, though, at least since President Biden has been in office. If you take a look at the bills that have gotten passed, the Inflation Reduction Act focuses on what? Energy. And not just clean energy, but cleanish energy and carbon capture, biofuels, to an extent, natural gas development. If we had two more pipelines, one in the Permian and one out east, those might be the two last pipelines we ever need. We'll see if they get built. I think the pipeline out east that Joe Manchin's been trying to get done would take presidential intervention. You might get that right after the election. And in the Permian, which we're very familiar with because of our investment in Kinder Morgan, they could use another pipeline and more gathering. Texas isn't going to oppose that. They have to get around the environmentalists who, they're very absolute. And while I understand and empathize and agree with a lot of that, there are certain tactical situations within the broader strategy that have to be come to grips with. For example, our strategy long-term is to develop clean energy and get off of fossil fuels. But tactically in the short term, because of the way the world is structured around OPEC, we need to produce more. Not even the oil really, but the gas in the intermediate term. Short term, we use a couple more barrels of oil, but what we really need is natural gas for the next decade. And then clean energy pretty much takes over. We know that the growth rate is there. We know that FERC is telling us that America has enough clean energy projects in the pipeline that over the next decade, if they actually got built, that would supply us with 80% of the electricity that we need, inclusive of the increase in demand for EVs. These are government agencies telling us that. People doubt it anyway. So if you doubt the government, consider this. Take a look at what the industries involved are telling you. What is Ford telling you? What is General Motors telling you? What are the utilities telling you? Where is their CapEx going? They're not going to spend billions and billions of dollars and say, hey, just kidding, 5 years down the road, and then spend billions more to go backwards. They're telling you the future through their spending. So what does that mean for the dollar? What does that mean for U.S. prosperity? It means that things look pretty good because the dollar, as the strongest currency within the block of developed nations, large developed nations, always the caveat, there's a couple small guys out there, is always going to be the strongest forever. And forever is our lifetimes. And this all does come back to the dollar. Because as the dollar spikes, you'll probably get your last chance to make a perfect trade or perfect entry. And then the dollar is going to chop its way down into its range, which I think is going to be the top half of this yellow area, but with a drift up. So it'll come up maybe on the meeting next week. Then that'll be about it. Then it'll chop its way down before it works its way back up. So if it chops its way down into the late 2020s, we get our baby boomer crisis, bail them out. At that point, the dollar drifts back up just based on the strength of the economy. So what you're going to hear from others shortly, especially your Bitcoin maximalists and your Austrian economist wannabes who don't really even understand what they're talking about. And if they did, they wouldn't say what they said. You get kind of a happy face on the dollar. More of a smirk, I would think, or a tilted smile, crooked smile, because the dollar is not going to collapse. It's too strong. And when the petrodollar is gone, and we're heading in that direction pretty quickly, actually, talked about that a few years ago, it won't matter. One of the reasons why Wall Street keeps talking to Saudi Arabia is because they are really in a pretty good financial position, and they should be able to take care of their population, but they won't. The money will just be hoarded by the people at the top. Their wealth inequality is way worse than it is here. But Wall Street is into the big skim, so they'll go. You should be aware of what they're doing because there might be an opportunity for us to pile on. And then you need to do good things with your money. If you're going to do those investments, turn around and do something good with the money. I won't do most of those investments. I had to swallow really hard to buy a little bit more oil and gas stocks recently. But it makes sense, and I have to do what's right for my clients, and you two are members of my community, so I'm telling you what I'm doing. On this spike in the dollar, if we get it, I'm going to be a huge investor in technology. You have seen the technology stocks get beat up this week. Facebook, Microsoft, Google, Amazon is tonight. We'll see what happens. We're very close to the bottom in QQQ, so we'll cover that probably over the weekend. And as this dollar spikes, you get your buying opportunity. Then you get a pretty good rally, I think, the next couple of years. Now, could this be delayed a quarter or two? Sure. Hard to know. But the recession is starting to get priced in. And once the wealth effect is counteracted enough for the Fed to achieve all of its goals, they'll back off. At a minimum, they'll pause. They'll probably reduce the amount of quantitative tightening they're doing sometime next year. So you should be looking at all of this as, okay, how do I get in? And understanding that the time frames can change on us a little bit, which means you have to scale in slowly. I've had people talk on the message board as if they wanted to jump in. Don't jump in. Scale in slowly at wide price points because nobody is perfect, and anybody who's telling you exactly what's going to happen is telling you exactly wrong. Nobody knows. And I've pretty much called this entire year pretty close to right. When you take a look back at the forecast for 2021 from all the major banks and everybody else on Seeking Alpha and anywhere else that you're reading, throw mine in there and then tell me who was the most right. We got you into cash, started buying the small caps in earnest early this year. You should be filling out all your small cap positions right now. Small caps have already started to outperform. And when the Fed does loosen up a little bit, the price of all of those are going to go up. I'm going to show you a screen here in a second. So let's just give ourselves a couple signals here. The dollar is going up, but gold is coming down. Logically, that makes some sense to you, right? But then why has oil been going up? Supply-demand conditions. Oil and the dollar and gold won't always move together the way that you think they're going to move. There's always something underlying. With oil, OPEC's been manipulating it forever. You always have to think about what OPEC wants when it comes to oil. And with Russia invading Ukraine, put more pressure on the oil complex and the gas complex, especially in Europe. Really Europe is the one that's going to take the brunt of the pain on energy. Emerging markets are also taking the pain because their currencies are weak. I think you'll see more emerging markets tie themselves to the dollar in the future than to Bitcoin. But any adoption of Bitcoin drives Bitcoin up a lot. So the United States is in the process of switching who's involved with the dollar and to what degree. China financed things for a while. In the future, it's going to be the emerging markets and India. And these super long-term cycles, secular trends, will change someday. Probably not in our lifetime. So it's just a shift of who uses the dollar, what parts of the financial system use the dollar. And Saudi Arabia knows all of this. They're not dumb. They hold a lot of dollars and they're diversifying their currencies, but they know they can't crash the dollar and they know that we can wipe them out if we want to. So they're just playing the game, right? So don't hate the playa, hate the game. You got to hate something. You can hate MBS too if you want. He seems like kind of a jerk. Lumber futures should be telling you something about what's coming. They've crashed, right? Lumber is right at a super long-term support right now. If it breaks down one more time, then we're for sure on our way to a recession. But that makes building costs come down, which will in turn do what once money lightens up a little bit, stimulate building. So this is going to be a good time to probably buy some builders that are on our list. Energy stocks, it's a heck of a channel upward, right? At some point, though, I do think it's going to break out to around 100. At some point, it breaks this channel. Probably coincides with panic pumping sometime in the middle of the decade. So you might get a rally, some chop, and then a breakdown. That'd be my guess. Rally, chop, 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 breakdown. Middle of the decade somewhere. I'll even put a target. Probably about a 50% correction. Let's use the weekly chart so I can get a little bit more length. Let's say probably 2026 or 7. Let's just put it there. About there. These two lines are parallel, by the way. There. By changing the way the graph looks, you can see that it probably does get to 100-ish. Because keep trading up. This is a pretty straight up line, right? At some point you lose a big hunk. I think that this could even, let's say about a lot of sellers in here. And oil people are sticky investors, so it'll take them a while. So if half of the complex loses half its value, the other ones don't make any money. Where does it end up? I don't know. Pick a spot. In there somewhere. You get the point. So where are some of the big opportunities right now? The dollar is super strong. Look what it's done to emerging markets in China. This is China technology. This is half emerging markets and half China. Basically, this fund. Pretty similar shapes, right? What did I tell you 2 years ago? Sell your what? Come on, someone wants to say it. Sell your what? Commie stocks. That's right. What is the time to do now? Buy some what? Buy some commie stocks. That's right. You're going to have to hold your nose and buy commie stocks. Here's the real reason why. Reason nobody talks about. The reason that if you wrap your head around it, you'll make millions. I know this because it happened to me. If you understand that the markets are really controlled, I should say directed, by the super rich, by the major economic powers, including industrial powers and resource powers, markets aren't really controlled by retail. That's not where the big money is. The big money is in the banks, the insurance companies, OPEC, sovereign wealth funds, some of your $500 billion plus corporations, and governments. And governments that are autocratic don't play by the same rules that we do here in the United States, which is we have rules that we ignore versus just changing the rules how we want to use them at a given time, which is what they do in China. We're a little less dishonest than they are, and we're a little bit more altruistic than they are. I'm talking about the government and the big money players and the power and the wealth, that wealth and the power. So if China wanted to manipulate the dollar, they would manipulate inflation. They've done that with the supply chains. They've done it in cahoots with OPEC over oil, and Russia is going to end up being the fall guy because Putin's ego is so big, riding on that horse bare-chested, that he didn't know he was getting played. We've talked about this for 2 years that he was getting played, and then Ukraine happened. What's good for China next? What has been the trend with China for 50 years now? Suck in Western capital, let them think that they're eating the steak with you, and when done chewing, spit them out. I had a professor in the early 90s, I think it was my junior year. He was a Chinese dissident. He can't go back to the country because they'd kill him. I think some of his family died in prison. He said to me, Kirk, China is just a bait and switch sort of thing. They do it over and over again, the carrot and the stick. And he used the carrot and stick example. Right now, the carrot's hanging out there. People are still afraid. Who do you think is buying the Chinese stocks right now? Think that through. Who is buying the Chinese stocks right now? What sort of people? Close. People are saying China or CCP. It's the rich, connected Chinese. So if the rich connected Chinese are buying up the shares of the technology companies and other strategic companies, what's going to happen to the share price of those companies in the next few years? They're going to get manipulated back up. China has been holding back its economy since COVID with COVID zero, because that was part of creating inflation. And the yuan has gotten crushed. So now if they ramp up production again, fill up the pipelines with goods again, and the price to buy them is cheap, people will buy a ton of those things because they're cheap and they're coming again. Then the yuan will start to go up, which is good for them because they hold yuan, renminbi, if you want to call it that. And all the Western money that floods into those stocks in the next year or two, as the American currency, dollar, falls relative to the yuan, not a lot, but it'll be a change in direction. Eventually, the price of those stocks goes up again. What happens when they get up here years down the road? Some other puke event crushes them again. When you invest, you can't just be a fundamentalist. You can't just say I'm a value investor. You can't just say I'm a macro investor. You can't just say I'm a technical trader. You can't. You have to be all of the above. If you don't understand the macro, you don't understand where the giant waves of money are going. If you don't understand the industries and the companies through your own bottom-up analysis, but also, and more importantly, because it's easier to do, the ability to figure out whose bottom-up analysis is good, right? Be a buy-side person. I mean, you're all buy-side investors. I hope you understand that. You're all buy-side investors. Almost none of you are doing bottom-up research on companies. I try to get you to think that way, but I know that you're not pouring through 10 Qs like I am, or that I have 2 AIs doing for me. And really, Adobe is almost good enough, just looking for keywords. So you're trying to understand the analysis of these companies and industries. And your job is to figure out who's good at it and apply that to your situation as best you can. And then technical trading, that's short-term stuff, but it also can get you good long-term entries. So we look at this chart, and one person might say, oh, that's a horrible chart. It keeps going down. And you know why they say that? Because they're looking at just this year, right? They're looking at this year. Well, look, it's bad. That's horrible. Okay. But now take a look at it. If you're a longer term investor, what should you be thinking? You're thinking this thing's down 75%. I should start to scale in here, see how low, how many times I have to buy, 2 or 3 times. Now you could also wait for it to start to jitterbug and then move up. The 3 drive is a type of formation, which is, I call it the jitterbug, when it goes up and down, and up, and then it breaks out. Shooter talks about that one. So when I tell you to buy something, I'm seeing something in the chart that says, okay, now is the time. This breakdown right here is representative of a bottom or a bottoming process. Can it keep seeping down? It can. The safest way to enter is wait for that first one up, and then to retrace down and then buy that. Because at that point, the odds are you're going to get one more up, one more down, and then a breakout. So keep an eye on this. If it rises a little bit and then comes back down, especially without setting a new low, you need to really get involved. So I don't send out a lot of trade alerts because I'm only sending out trade alerts when I actually buy. And I get questions. Should I buy now? Should I buy now? Should I buy now? How do I get in? Chill, bro. There's a lot to it. Think like a rich guy, not like the loudmouth at the bar who says, I made a bunch of money in Bitcoin or this stock, or I got a tip from my hairstylist. But we are very close to using up almost all of our cash to buy things. I've started to scale into EMQQ because I thought this was the jitterbug. It went down one more level. So be it. The next one will be the jitterbug and then the breakout. I can live with that. I bought at 30. I bought at 24. Some accounts got it at like 21 and change. In any case, EMQQ is awfully cheap, but I think you should be able to see how this is going to retrace back up. Does it get all the way to the highs? Half to 2/3 is standard, but probably you start to get your waves up. First wave up, pull back. Second wave up, pull back, and then a really big wave up. And maybe it sets new highs, maybe it doesn't. So I want to show you the earnings for the United States. So far, out of 186 companies on the S&P 500 reporting, 26% have missed, which is higher than normal. And the surprise has only been 1.4% positive, which is way below normal. Usually the expectations are couched by management in a way that they can beat them. So the fact that over a quarter are missing, that this isn't 3 or 4 or 5% is very worrying. Consumer discretionary, almost 50-50 on hits and misses. What does that tell you? American consumer is slowing down. What quarter of the year is almost always the slowest quarter of the year? We've talked about this 100 times. Class, which quarter is usually the slowest quarter of the year? That's right, Q1. Why? Because you already got all your presents. I think if the Fed is smart, they back off in December. I think if the Fed is trying to make a point, they wait until they start to see the Q1 estimates at some point, and then that's when they back off. It's coming. It's pretty nearby. Here's an article that I'm writing. This will be the next macro dashes. What the Fed does to employment, it does to stocks. If the Fed really causes unemployment, stocks are going to hit that Armageddon zombie apocalypse zone. So keep an eye on employment. We have talked about employment for years as the harbinger for how severe things can get, positive or negative. If unemployment goes up by more than a point, we're going to have to head for the hills again. I don't think that's going to happen, but it is more likely to happen than most other times. So if they start to kill employment, we just have to look for as many exit opportunities as we can. This is what we're going to keep an eye on early next year. And I just want to throw something out here. I really hope you've all subscribed to TradingView, preferably through my link, so I make the $7.50. But just a great screener. So here's a balance sheet screener. I just did it by quick ratio. Basically, the liquidity companies have to pay their bills. Take a look at who's on here. MP Materials, Ginkgo Bioworks. Take a look at their debt to assets. Take a look at Ginkgo Bioworks, right? They have almost no debt and growing revenue. One of the things that you find on here are a bunch of SPACs as you go through it. Why are the SPACs on here? Because they came to market with a pile of cash. If they haven't spent through it all, by the time they start to turn profitable, holy cow, you have an essentially debt-free company that's profitable. That's pretty sexy. Palantir. So we can go through this. They're in the same company as Berkshire Hathaway. That should help you conceptualize where they are. Here's another man-bag stock down here. That one's going to turn up in the next year. So it's not just the oscillators that I follow or that you should follow, right? Here's your overbought stocks, not many. Most of them are energy, but they're still breaking out. So they have a little higher to go. They'll go from 60s to 70s to 80s. And you flip it upside down, you start to see your oversold stocks. Intel should be in everybody's portfolio, growth or income investor. And you can buy it right now or sell puts on it right now or a little bit of both. It is undervalued by a ton and it's oversold at the same time. That's what you look for. Fairly valued or undervalued and oversold. This is a monthly chart, and that's long term. You're not going to get a much better deal on Intel. Ginkgo Bioworks, Coinbase, if you're a Bitcoin believer. I own it through DApp. I don't own it individually. I just buy DApp, DAPP as a symbol, because you get the basket of the top dozen blockchain companies. Exact Sciences, I just have a hard time dealing with this company anymore. I don't know if it's me or them or everything. But if Kathy Wood is right, and these guys are on the verge of some big things again, it's a biotech with some money and a really good CEO, and it could go back into the hundreds if they develop something that, changes the world a little bit. Lyft and Uber, I've been thinking about. Teladoc, I think, just gets bought out. I don't see how they don't. I think somebody just buys them. DocuSign, kind of like Crowdflare. I don't think either one of these companies have a moat at all. There's lots of competition for DocuSign all of a sudden. A lot of competition for Crowdflare all of a sudden. Roku's getting competition. So sometimes they're oversold for a reason. Comcast is one of the companies that did pretty well at earnings. I think they're up a bit today. Square, again, you can get that through DApp. I also own it individually. PayPal, I haven't been in for a while. If it gets cheap enough, I'd have to be. Warner Discovery, is a big holding for me. We've talked about Generac. Unity we own. So we're going to cover a lot of these in the stocks of the week. I am changing the stocks of the week to put it out over the weekend, by the way, rather than waiting until the new week. And it's just really going to be a summary. And I'll come out with my individual buys as they happen, trying to spread my work out. Otherwise, everything needs to come out on Monday, and that's too hard. So you take a look at these screeners and you start to think about some of these companies. Man, if they get beaten up a little bit more, we know that they're just gushing cash. What does that turn into? All right. I think that's all I got for today. Long call. Edit this down. But remember, it's all about the dollar. It's all about what the Fed does to employment using the dollar. So if this dollar spikes and doesn't come down pretty rapidly afterwards, that means employment's in trouble. That means stocks will have another wave down at some point. I'm hoping We are near the bottom here in the next couple of weeks, but I think that the Fed is going to be very nasty next week. And then I hope they get what they want, which is everything to come off. And then in December, I hope that they say nice things. We'll see. If they destroy employment, stocks are going to get crushed to the Armageddon zombie apocalypse levels, and you probably have a lot more people in the streets. So let's hope that doesn't happen. All right. Take care, everybody.